Good morning, everyone. So today is September the 30th, 2025, and we're really glad to have one of our great guests here, Andrew Flores. He's a very established multifamily broker in the Dallas-Fort Worth area. And today we're thrilled to have him to be here and share with us about multifamily acquisition as well as multifamily investment. Oh, thank you for being here, Andrew.
Well, thank you, Jay. Thanks for setting this up.
So maybe we can start a little bit of an intro and what type of multifamily assets that you broke and what areas do you typically specialize in?
Yeah, no, absolutely. Thanks for doing this again. I grew up here in DFW, so I'm really familiar with the areas. It's changed quite a bit since I was a kid. I typically work with owners and buyers of multifamily buildings, typically in the 50 to 200 unit range. Lately, it's been a little bit harder to get those bigger deals done, so it's been some smaller deals, like less than 50 units it's been a little bit easier to get through to the finish line. Yeah.
Hmm. Yeah, right now the market has been very, very interesting, right? So, as a multifamily broker, as you know, time is money. What buyers do you typically like to work with, and what buyers do you think are wasting your time?
Well, I don't like to think anybody's wasting my time. When I talk to new buyers, it's always great to answer as many questions as I can for them. But I think the biggest thing for a seller is surety of closing. They really want to make sure that the deal's going to close. Um, so I think that, whether that's a track record or whether that's proven equity that's ready to be deployed, those are always great things to see. Like I said, I don't really like to think that anyone's wasting my time, but I think I may cut off a conversation short, or I have cut off a conversation a little bit short with a buyer if they're kind of asking too many questions up front, or if they're asking questions that are in the offering package, or asking like really detailed questions before they've really dived into the deal and gotten into the numbers. In those situations, I'm like, make sure you look at the offering package, because I think that a lot of novice buyers will just want to know everything up front, without looking at all the materials that's been presented.
Right. Seems like there are 2 points that we're looking for, right? Number one, they have the resources to actually close the deal. Number,
Yeah.
they're educated so that they know what they're buying. So, can you elaborate a little bit about the bidding process after you get a few offers from potential buyers? Because we always hear that sometimes the highest bidders not always get a bid. So, like from your experiences, like does it happen often?
Yeah, I would say that it does. I mean, I think that sellers sometimes override our recommendations if they want that higher price and give somebody a chance. And I think the bidding process is a little bit different depending on if it's off market deal or if it's a marketed deal. Like usually a marketed deal, we want everybody, as many people to look at it as possible, and we'll get offers initially, which will show the seller, but typically we'll wait for all the offers to come in, so that we can have a variety of different offers to choose from that we would recommend to the buyer. And typically those are like the top three or the top four buyers. And sometimes it's not the top buyer or the top offer or the top highest price that we would recommend. I think, like I mentioned before, surety of closing is the most important thing. We just want to make sure that the property closes. So if it's somebody that we've worked with before, that we know is a closer that's not going to be retrading the deal. Retrading is like when we've set on a price and then they come and look at the property and kind of change their mind. But I think that if it's an off market deal, it might be an offer that could be accepted right on the spot. So the process is a little bit different depending on the deal, depending on what type of process it is. Typically, the marketing process is 30 to 45 days. And then that's when the call for offers will be, and a decision would be made.
So I have two questions. Since you talked about off-market deals, right?
Yeah.
So everyone is talking about off-market deals because people typically think that off-market deals are better than the market since you don't really have that many competition. So What is your take on off-market deals, particularly given the time that we are in?
Yeah, yeah. Well, and the market's changing. It's changed quite a bit in the last year and a half. I think that a year ago, off-market deals were those deals that were on the market that didn't sell, and now they're off market. And so the pricing hasn't changed, and it's still just kind of not, it doesn't pencil in. And I think that we're starting to see a tightening of the gap between sellers and buyers. So, um, I've got a deal right now that's under contract. It's kind of one of those. It was marketed by three different brokers, not sold. It's just been out there as an off market deal. And when I contacted the seller for it, he was like, man, I really need to sell this thing. And the person that's buying it is a doctor out of California, and he's looking to offset his income as a real estate professional, or doctor as a real estate professional, and his offer was like way lower than I thought could be accepted. And I was like, "There's no way you're going to get this deal," but he had hard money up front. He had $50,000 go hard up front, which really gave the seller some surety that this guy's serious and is going to close. And so that deal right now is under contract. And I think as far as off market deals go, a lot of them don't pencil out. Like this one, I really wanted to buy it myself once I found out what price the seller was really willing to get to. We're still in that flux where a lot of off market deals are off market because they didn't sell when they were marketed, and the prices haven't really come down yet.
Interesting. Well, first of all, congratulations on this deal. It seems like it's sure to close, so that's
But
good.
we hope so. Yeah.
Yeah. So speaking of that, I think you mentioned the doctor putting like a very hefty earnest money upfront when it comes to buying the deals, right? So that actually goes to another question I have is, do you have or have you seen very creative methods for the buyers to win the bid? Because it's a very competitive market, particularly a market like Dallas Fort Worth, right? So any creative methods that you know or you would recommend for the buyers to win the bid out of a few offers that you received?
Yeah. Yeah. Well, that's one of them. Hard money, which is non-refundable. Earnest money. That's
What,
usually,
where do we sit right now in terms of earnest money? I know the market changes. So right now, how much do you need to put in and how much do you think is going to be non-refundable?
okay. Yeah. Yeah. And that all depends on the deal and the buyer. But typically for earnest money, I'm seeing 2%. Earnest money, a $10 million deal, then $100,000 earnest money, something like that is typically what's seen. Now, what's non-refundable is negotiable. Obviously, the higher,
The
the
bet.
better. The higher that is, the better. But I've seen properties go under contract for as little as $15,000 to $20,000 of that being non-refundable. Um, and typically, I mean, I think that you can get creative on it. It doesn't have to be to where you haven't seen the property or you haven't inspected the property before that money goes hard, even though at PSA signing or PSA execution, it could be non-refundable. We could work out a deal and be creative to where you inspect the property as contract negotiations are taking place. So usually, like you send in an offer as an LOI, which is a letter of intent, and if that LOI is accepted, there's a time frame before the purchase and sales agreement is created. So within that time, uh, we could arrange for the buyer to inspect the property to his wishes. That way, when his money is non-refundable, he's already looked at the property. He's already set eyes on it. He's already had inspectors come in and give him bids on what it's going to take to create the vision that he's looking for the property.
Right. So in order to buy the period for inspection, usually how much money needs to go hard, or there's no money needs to go hard at all during the period.
In this situation, yeah, there's no money that goes hard. Now there's money that you're going to have to spend on inspectors. There's money you're going to have to spend on that kind of stuff. So that money is non-refundable, but it's not to the seller. So it's a negotiation period. Typically when LOI is accepted, that's not the contract for sale. There's a purchase and sales agreement that's negotiated back and forth. Usually that process takes about a week. Um, and so during that time, we could set up those inspections. Now, whether the seller is willing to do that or not, that's a different that's a different story. But most sellers are typically willing to allow some kind of, whether that's looking at all the vacants, whether that's scoping the sewer, taking a look at the roofs, or anything major mechanical on the exterior. Sellers are usually typically pretty amiable to allow that to happen without the money going hard, because the earnest money's due usually after the third day of contract execution. So there's usually like a week or 2 weeks between LOI acceptance and the purchase and sales agreement being executed.
Okay. Any other like creative methods that you see for people to win the bids?
The other thing I see is like a short due diligence period too. So if, like, let's say none of those things are possible, you're not willing to go hard day one, but you're willing to show that you're really like this deal and that you really want to close it and you really want to be competitive. Uh, Instead of making it a 30-day due diligence period, shorten that up. Make that a 15-day due diligence or a 20-day due diligence. That way, the seller knows that there's a short time frame before some money goes hard. And then I've also seen other people do it in phases where, like, day 15, 20,000 goes hard. Day 30, the rest of it goes hard. That way, there's less of that. And I think the other thing that I've seen too is a lot of people want to put financing contingencies on their contracts, which makes the deal makes the buyer less competitive. Although, a lot of deals are getting done with financing contingencies, but if you want to be more competitive, instead of putting a financing contingency on it, just put a due diligence period contingency on it. 30 days. By 30 days, you should have a pretty good idea whether the loan is going to go through or not. Um, so I think those things make the offer more competitive. Just try to reduce the amount of contingencies in the contract so that the seller has an idea. By the time some things happen, they know the deal is going to get done. Because a financing contingency through the end of closing, just is not really attractive, because the buyer can pull out of the deal at any time and not lose anything.
Right, right. So since we're now talking about financing, another hot word that we usually talk about, seller financing, right? I always ask the seller if I have a chance to meet him or her, to see if they're open to seller financing type of arrangements. But
Yeah.
to be honest, I don't really have a lot of success for there. So you work with a lot of sellers, just trying to figure out like why are they not open to seller financing, and do you see a lot of seller financing type of arrangements at all?
I've done only two in my career. They are hard. I mean, I think typically because of the loan that's underneath it. Usually, it's a Fannie Freddie loan or something like that. That's has bad boy clauses on it. So basically, these bad boy clauses are things that the owner would do that would violate the loan covenant. And seller financing is one of those. So they can't wrap the loan with like another loan. That would be a bad boy clause. And that seller would be blacklisted or just wouldn't be able to do a Fannie or Freddie anymore if they violated one of those clauses and were caught. So I think that's like the biggest issue that I see with doing seller financing. The two times that I did do it, they were like the seller didn't want to do them. They were like, no, I want my money up front because I'm doing a 1031 and I need all my money so that I can put it in this next property. But after they did them, they loved them. They were like, there was a seller finance component, and they were 5-year balloons. And in year two, both of them, in year two, they refinanced, pulled the money out, paid the seller, the original seller back. But the sellers when I went back and revisited with them, they were like, man, I wish they wouldn't have paid me off, because they were set at like 9% interest. And a lot of them don't want to take a 30-year mortgage. Even if it's amortized to 30 years, they typically want to see like a 5-year balloon or something like that. But I think if it's going to be like a 5% or a 6% loan, maybe yeah, a lot of sellers are like, well, you can get that from a bank, or Fannie or Freddie. Like, why are you asking me to do that, take that risk? So I think that the ones that I have done were really happy with how it worked out. They had a third party servicing company taking care of the payments and taking care of the 1099 that everybody gets. So I think that they really liked that process, and then we're kind of depressed when they were paid off, and not getting that interest anymore. So it's kind of a double-edged sword.
So you said that the seller is actually accepting seller financing arrangement for 9% interest rate. That's very high. I mean, why would the buyer do that? Because they would be able to get a lower interest rate through Fannie and Freddie, right? So just curious, why is that?
Yeah, so those situations were a little bit different. The property, for some reason, didn't qualify. It was like at 87 or 88% occupancy. So it was like below that 90% threshold. It was in Waco. So it was like a secondary market. It just had a lot of things going against it. Financials weren't awesome. Those kinds of things kind of stacked up against the buyer not being able to get agency. And it just made sense. Even with a higher interest rate, we believe we can get the property performing. It was just interest only. So that made the payments low enough to where they could operate in the positive.
Okay, that's very interesting and great to share. Okay, so last question. Since now we're in September 2025, I did read from a few sources saying the market is coming back. Well, the multifamily market is coming back. Do you feel the same way?
Man, that's a really good question. I think that's a question I ask every day is like, if we hit bottom. I think we're going to see some more Fed cuts. Hopefully that drives the market a little bit more. Prices have come down significantly in some areas, and rents stabilize. I think year over year rent growth has been really weak the last 2 years. Just a lot of deliveries that have come online. A lot of that development has slowed down quite a bit, but there's still a lot of deliveries coming. We still have a lot of people moving into the area, so I think that's going to help absorb a lot of that. But as multifamily brokers, we get paid when we do deals, and it was hard to get deals done the last 2 years. I'm starting to see more inventory come online from other brokers as well. Now is a good time. Like I'm telling sellers that I don't know if we've hit bottom. It feels like we've hit bottom, but I think that if you keep holding on to the property for another 6 months, I don't think that that's going to make a big difference in pricing. I think it's going to take years before we get back to the pricing that we saw in 2020, 21. So I think that, even though we've hit bottom, or I think we've hit bottom, prices aren't going to go up for a while. I think they're going to kind of stay here for a little bit. So hopefully, if we can get owners to go ahead and sell, because a lot of the owners that I talk to, they're like, oh, let me hold off a little bit longer. Interest rates are going to keep coming down and prices are going to go up. And I just don't see that. I think that they're probably going to be flat, maybe even go down a little bit more for a little while longer.
Right. Well, thank you very much for sharing, Andrew. So how would we be able to contact you if we're interested in buying multifamily in the Dallas-Fort Worth area?
Yeah, my phone number is 817-946-1458.
Okay, great. So we'll certainly post your contact information after we post this online. But thank you very much for sharing. It's great to hear from you when it comes to the multifamily investments in the Dallas-Fort Worth area. You're the expert on here, and we'd love to keep in touch, and hopefully we would be able to work on some deals together.
Awesome, man. Well, thanks so much.
关注我，通过房地产实现财务自由。